Welcome to the special edition of To the Point. Our special guest today is Dr. Supachai Panitchpakdi. Dr. Supachai is the Secretary General of the UN Conference on Trade and Development. Before that, he was the Director General of the WTO. And before assuming these, he has had many serious responsibilities in the government of Thailand, in international bodies. He had the good fortune of doing his PhD under the first winner of the Nobel Prize for Economics, Jan Tinbergen. Welcome, sir, to the show.
Thank you very much for welcoming me.
So we are going through a very special, interesting phase of development for developing economies as a whole and for the global economy.
True, yes.
What do you think is happening? Is the worst behind us, or can we hope to see some steady improvement?
Well, I think we have come out of the last crisis in an uneven manner. There are parts of us, particularly those countries in the South, and particularly in Asia, they've been doing quite well, coming out rather rapidly of the crisis and recession since the middle of 2009, and since then they've been relatively well established and moving ahead, although not at the same speed as before, but at least on average of growth between 5 to 6% compared to the growth of the advanced economy, which is between 1.5%. This is about 4 to 5 percentage points difference. So that's why I say the recovery is there, but it's a little bit uneven. Emerging countries, developing countries in general, are doing far better at the moment than the advanced economies.
If you look at the situation when the UNCTAD was founded way back in 1964, yes, when the problem really was underdevelopment, yes, we have come a long way. Now we are looking at how to accelerate development. That you have to stay underdeveloped is no longer an issue. In the first part of this last decade, the least developed countries grew at an annual average rate of 7% for 7 years,
yes,
which is phenomenal. Now the question is, has UNCTAD as an organization evolved from tackling or struggling with underdevelopment to enabling development?
Well, yes, you're right in some ways. We've come a long way. We've seen the participation of the developing countries in the global trading system, which used to be less than 10% a couple of decades ago. Now, developing countries are taking at least half of the volume, in trading among themselves. So it's another dynamic world for developing countries. But we still have some kind of problems that are linked to the kind of globalization process that has taken place in the last couple of decades. That most of the time, the terms of which have been dictated by practically more advanced economies that would like to see as much opening of the economies of the developing countries as possible, and to have more privatization, to have also more liberalization in the financial system and things like that. So I think as much as the developing countries have made advances, I don't think all of them are equally ready to open up their economies to the fullest possible extent and enjoy the benefits. The middle income countries and the emerging developing countries may be in a better position to subject their economies to more competitive positions around the world. But those with lower middle income countries and the least developed countries, there are still 49 least developed countries in the world. And they have been doing well, like you said, before the crisis. They did very well. The growth of average 7% per year, and export more than, I would say on average, more than 15% per year. But since the crisis, I don't think they have come out of the crisis quite well, this group of 49 countries, and they seem to be accumulated more debts in the past few years. And so we are at a different level, but we are facing a new level of competition in which developing countries are asked to do more, and this is a new the new issues that we have to face, together with some other I would say novel issues. For example, to go into green economy, to be moving into the what we call now the global value chains, to be competitive, but in a way to rely on the connectivity of the multinational firms and things like that. So we have to pose the questions whether the European countries are going to have net benefit out of this new era of globalization or not.
You recently had a report where you pointed out that in some segments like shipbuilding,
yes,
developing countries today have a 67% share in product manufacture and export. Now, does it lead you to believe that there is scope for desegregating, unbundling developing countries and treating the least developed countries as the focus of an organization like UNCTAD?
Well, we are actually the focal point for the LDC's issues. Although in New York we have the High Commission or High Representative for the LDC's issues, but UNCTAD does the kind of background information on the LDC, particularly now since the last LDC summit, LDC 4 in Istanbul last year. We have set our sight now on a graduation process that will be driven more actively than before, because we are looking at the next 10 years, and at the meeting we agreed that at least half of the LDC should begin on the road to graduation by, let's say, 2020. So it's a tall order, but that is one big issue that we are tackling with. But overall, I would say that the way we are looking at the new challenges to globalization, to the European countries, would be how to steer development into a new path, that the European countries should not become too dependent, for example, on primary products. How can they be more competitive with diversification?
It's time for a small break, after which we shall come back to Dr. Supachai. Welcome back to the special edition of To The Point. Our guest today is Dr. Supachai Panitchpakdi, Secretary General of the UN Conference on Trade and Development. Sir, we were discussing how trade has evolved and how the strategy towards development varies for least developed and developing countries.
I was saying that with the new generation of globalization, we seem to be driven more and more by the financial liberalization, letting the financial institution grow and grow through different means of competition, for example, to go into shadow financing, to create value added for the financial system without creating the real value added for the real sectors. That's why we are seeing recurrent problems in the financial crisis that hurts the European countries in a very disproportionate manner compared to developed ones. It also gives rise to a lot of inequality by the way that a lot of wealth-based incomes have been derived from the financial activities, whereas the wage incomes have been kept under control. It has also given rise to certain financial monetary policies that has been held captive by so-called inflation targeting, instead of trying to balance it with the growth targeting, because what we need at the moment is that in spite of the quite buoyant growth that we have seen in the European countries, the growth has not really brought about the kind of creation of jobs that we have seen before that time. So at UNCTAD we are looking more and more at how we can build up productive capacity, how we can make use of the financial system. So the financial system should not live its own life, but should be helping, serving the real economy more so than in the past.
So you are essentially saying that the governance of the financial system and the regulatory architecture we have is inadequate to control global finance, and perhaps even in national jurisdictions.
Yes, we fully believe that. We are a little bit more conservative in that we believe that for development purpose, we need to have sort of segregation between commercial banking, conventional banking, where you have savings and deposits, and where you have the normal lending for projects, for trade financing, for the kind of household needs. But when you come to investment banking, when you extend it into securitization and debt obligations and securitized loans, things like that, they should be under different kind of supervisory framework, because there you don't have the control on the equity base. Whereas when you have the commercial banking, equity base is control, and so governments can handle the crisis when it happens. But you can see in the last crisis, the leverage level has gone up through the roof. I mean, it could be 40, 50 times the capital. It was not controlled by anybody. So the latter kind of banking activities, the so-called shadow financing, we don't believe that it has brought a real benefit, net benefit to the developing countries.
But would the Basel III norms on capital adequacy sort of put a check on how much leverage banks can bring to bear?
Well, and you can see the Basel set of supervisory rules are now trying to come up with recommendation to enhance the equity ratio, which I think at the moment, if I'm correct, it should be around 8% of the total assets. And for banks in Europe, in some countries like in Switzerland, they want to raise it to double that level as well, because they see that during crisis time, maybe even 7-8% capital ratio would not be sufficient, because sometimes you have NPLs up until 10, 20, 30% of the assets. So we are seeing the process of trying to have the strengthening of the bank's balance sheet, but at the same time there are also movements to steer the non-commercial banking activities into an area in which maybe there should be a certain monitoring process, if not control, on the way they leverage their balance sheets. They can have more transparency in the way that instead of over-the-counter trading, there should be some clearing system that we can really monitor the size of the activities of the shadow finance.
Especially for credit default swaps and all that.
Yes, that's right. All this that has actually spawned their own life without having enhanced the way capital could be mobilized for real investment capital formation.
At the same time, the choice for a country like India, whose financial system is yet to evolve and acquire complexity, is to tread so cautiously as to forego the benefits that arise from financial complexity, or to seek the regulatory lessons and create new and innovative products and to get their benefits, yet supervise them properly to keep them under check.
This is the issue that I think in Asia we are discussing a lot about how to direct the future financial system development into. In the past crisis in 2007, 2008, Asia has been quite cushioned from the impact, because Asia has actually learned from the financial crisis lessons in 97, 98, and banks have been better supervised and better capitalized, and they have not gone into the securitized business so much. But the question is that because some securitization could be handled in a transparent way and in a way that one can certainly supervise the leverage level, so that it could help to reduce the cost of borrowing, because securitization is supposed to be a sharing of risks, so that borrowers can get their hands more on the loan, and the banks can actually share out all the risks. And of course, in certain areas where we are seeing a lot of movements in currency, for example, we need some of the derivative activities, because people need to buy forward or sell forward so that they can protect their own exchange rates, earnings, things like that. So in a way, Asia will have to be balanced. I don't think we should stop at only traditional banking system, commercial banking system in Asia, and in India, same thing. But we should gradually evolve the system that we look, the index bonds and trading in index shares, and also in derivatives, in securitized loan and debt swap and things like that. But to do it in a way that we have certain monitoring system, transparency requirements, and certain leverage I would say prescription, not to let things go, up until through the roof.
The central bank in India requires that the securitizing agency retain 5% of the securitized asset on its books till the maturity of that instrument.
I see.
Which means that you have an incentive to ensure that the quality of the thing that you're selling off
Yes.
is good, because you are exposed to its quality,
keep some quality.
whereas this wasn't there in the US. Would you say this is a decent way of
This
getting
is
it?
one innovative way of what I would call macroprudential. This is macroprudential exercise in trying to have the banks actually sharing in the risk and making sure what they are selling, that they're not just trying to offload some of the the risks that they have. This is what they did in the past, because what they did in the past was that as if there is no tomorrow, they took on every kind of risk and they just offloaded through all kind of murky securitized papers to the rest of the world. Now if they would have to hang on to it as we were doing it in India, I think it's a good idea of tracking it.
Please stay with us. We'll be back once again after a short break to this edition of To The Point. Welcome back to this edition of To The Point. We have with us Dr. Supachai, Secretary General of UNCTAD. Sir, now we were discussing financial regulation. Yes. Now if you look at any summit statement by the G20 or finance ministers meet communiques, you will find an alphabet soup of new organizations that have come up, all dealing with various aspects of governing global finance. Now, do developing countries have representation in all these bodies? IOSCO, which does with securities commissioners. Then there is the Financial Stability Board. Then there are the Financial Action Task Force. Then there are organizations for financial inclusion. There is a legal entity identifier system. Now, do developing countries manage to find a voice in deciding how these things work?
I don't think as much as they are supposed to be. I have said several times in the past that within the G20, developing countries must be more assertive than before. I mean, of course, in all these areas that you discussed, the legal debates and in some of the debates on financial reforms, whatever is undertaken at the multilateral level still doesn't amount to the kind of regulatory framework that could be made into some uniform system as we would like to see. What we are seeing is that national supervisory bodies will go their own ways. They would issue their own Frank Dodd Acts, and they would do their own rigorous commissions like in the UK and in other areas. And at the G20, they'll be discussing several things, but most of the time, and when I watched from where we sat last year, was to try to identify areas of early warnings, for example, early warnings for financial crisis. And they couldn't agree really on the kind of indicators that could be the early signs of the crisis to come, whether it should be the budget deficit, whether it could be the leverage level of the banking system, or it could be the current account. You see, there are differences, and from outside, we thought that the global financial governance altogether would have to be actually reformed altogether. So not in bits and pieces. Financial stability mechanism for Europe, I mean, it's just like IMF International, it's just like European Monetary Fund for Europe. Within Asia, in the past, European nations and the IMF have actually discouraged Asian nations to set up their own Asian Monetary Fund, which could command much higher level of capitalization than in Europe, for example. And you can see that today, European nations are getting more standby credits from the IMF than those from the European countries. So it's a perverse world. It's a perverse world in which the European countries are not getting their hands on the handle of the international financial system, and yet they are seated at the tables to listen to all these discussions. And I thought last time what they did debate most intensively was in the areas of how they would look at the so-called currency war, which I thought such a thing didn't exist. Currencies movements have always, we are in the system of floating exchange rates anyway. So currencies float up and down. There's no war about it. So when we looked at currencies, we have to have a way to look at the real exchange rates that will reflect the kind of competitiveness of the countries. And this is a discussion that we need to do, and not to allow speculative moves like carry trades and other things to disrupt this kind of system.
At the same time, we must admit that a huge part of global surpluses actually come from Asia and developing Asia.
Yes.
And these countries themselves deploy them in the securities of the US or
That's right.
EU.
That's right.
So we cannot really blame anybody else for this kind of skewed deployment of global surpluses.
Yes.
Is there some mechanism that can be created to ensure that the surplus liquidity, which is actually investment capital, can be utilized for building infrastructure and growth in countries like India and other developing countries?
Certainly, certainly. And we have actually been dealing with these issues in several ways. In one area, which the Asian Development Bank has been doing, which is to develop the Asian Development Bank more into investment banking activities, for ADB to be helping floating some of these bonds, the Asian currencies-based bonds, particularly in surplus countries, so that you can issue bonds based on, I don't know, maybe on India rupee or Chinese renminbi. ADB has been actively involved in trying to create the so-called Asian infrastructure fund. At the moment, it's, I think, being created based in some institution in Malaysia, but it's not yet taken on as an Asian-wide kind of undertaking. I was hoping that we could ask from different Asian central banks to pull in some of their reserve currency. That's huge reserve funds in the hands of the central banks in Asia. So they can put some parts into the infrastructure fund so that ADB can help manage it and can help to buy bonds issued by national governments when they want to construct. Like in India, you badly need, but not only in India, but throughout Southeast Asia and Asia, you can do this. Or to try to multilateralize, which they are doing now, the so-called Chiang Mai initiative, the pooling of reserves, to make it into a real monetary funding so that they can be looking at the, I would say, a discussion on the code of conduct for exchange rate movements. They can also discuss how they can create not only government bonds market in Asia, but corporate bonds that could be backed up by the funding from the monetary authority.
Yet one area that probably again as new international initiative could play a big role is in green financing.
Yes.
Now countries like India require huge amounts of additional power generation capacity to be built up. It is possible to bring in advanced technology which will reduce greenhouse gas emissions by vastly improving thermal efficiency. But from a purely commercial calculus, it may not make sense for a country like India to invest the additional amount required to bring in this latest technology. So, but at the same time, this could be an opportunity for those countries who want to mitigate their own past climate sins to provide that financing so that they can ensure that the new capacity coming up in a country like India is or the advanced class technologies that reduce emissions. So we need that kind of a transmission mechanism to ensure that the willingness to spend on climate in the developed countries translates into investment in the latest technology in a country like India. So who can supply this transmission mechanism?
Well, I mean, this is a massive problem, not only for India, but for many countries. I look at it as I would say 2 or 3 levels problem. The first level of problem is how to affect the kind of transfer of technology or sharing of technology that the likes of India could buy into. There exists a huge amount of technologies that could be simple or simplified to match with the requirements of different developing countries. For example, I've seen desulfurization plants that could help to reduce the coal-fired power stations in many countries. They used to be very expensive, now they're less expensive, and it could be financed from some central fund. So my first level is to get our hands on the technology that could be transferred. UNCTAD used to propose that TRIPS, the trade-related intellectual property right, should be made more flexible along the same line as we used to do when I was at the WTO to render it useful for access to essential medicine. Now we need essential green technologies. So we should relax some parts of the TRIPS so that for countries who would like to buy in, that the proprietorship should not be monopolized forever and make things so unnecessarily expensive. This is the first level. The second level is a one that could be operated by the UN system, the so-called Clean Development Mechanism, the CDMs, which badly needs some cleaning up because CDMs was used mainly by the big developing economies because they seem to be better
equipped to handle
yeah, so this is a second reform of the CDM that we are going through. This is a second level at the UN level. The third one is to provide for additional green funds. This is one area in which we've been discussing heavily during the Rio Plus 20 meetings, and it's going on. And one of the few things we propose, for example, the taxation on financial transactions and airport taxes, taxes on marine transportation. We need novel, we need unconventional basis of funding. We cannot rely anymore on budgetary support from the advanced economy. But the problem at the moment is that there is no consensus on this. This is a third level problem.
Well, thank you for listening to us. This is all we have time for at this moment. We will come back again next week to this point. Thank you.